The Trade is brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.
And welcome to The Trade on this Monday. Before we get into the charts, let's take a look at what traders are watching out there. Well, US President Donald Trump on Sunday bore down on his administration's latest message that the exclusion of smartphones and computers and other electrical components from China will be short-lived, pledging a national security trade investigation into the semiconductor sector. Japan is gearing up for trade negotiations with the US that will likely touch on the thorny topic of currency policy, with some officials privately bracing for Washington to call on Tokyo to prop up the yen. And Wall Street share futures rallied in Asia after the White House exempted smartphones and computers from those reciprocal tariffs. Their gains were limited, as I mentioned there, as President Trump warning levies still likely at some point. And Singapore's central bank loosening its monetary policy for the second time this year, as had been expected, saying prospects for global growth and trade have dimmed, and the Trade Ministry cut its growth forecast for the city-state. And Australian gold stocks up as much as 2%, hitting a record high today. Gold soaring past the $3,200 mark on Friday as a faltering dollar, escalating US-China trade war stirred recession fears, sending investors flocking to the safe haven asset. Well, let's get into the technicals now. Michael Gable joining us from Fairmont Equities. Michael, welcome. I was just saying to you earlier, you've really got to be on your toes at the moment, haven't you, to keep across this news flow how it's affecting financial markets. So let's begin with equities, of course. That volatility last week was something else, wasn't it? I don't think we've ever seen anything like it. It was like it's been compared with a year's trade in 1 week. What are you seeing, particularly on US markets?
Yeah, very entertaining. I mean, Mr. Trump's a master entertainer, and I think we're all entertained at the moment. Yeah, look, I mean, we can go through all the different combinations of if this happens, then what happens next? You know, if this tariff gets removed, or this country reacts, or what does the bond market do, etc. Yeah, a lot of different sort of permutations there, but you know, I think if we just distill it down to the price action in the market and just look at how markets are trading. At the moment, it does appear as though markets have found a low for now, and it does look like a tradable low. So it does look as though we can get a bounce from here, and then we just need to continually sort of assess, of course, you know, until volatility dies down. Yeah, it's very much a blow by blow sort of situation at the moment.
So what are you seeing on the S&P 500?
Yeah, so in terms of the daily chart, looking a lot more constructive, at least in the short term. So when I was here last week, we're looking at a longer term weekly chart, and I was suggesting that it was more, you'd be more looking for buying opportunities, not selling. It was very close to the 200-week moving average, which was a major support level. Seems like we've bounced just above that. What I've got on this chart is a 200-day moving average. That's what the blue line is. So I think we'll move up to that level. When I look at how the market's traded since that low, I think it was on the 7th of April, sort of intraday on the S&P 500, the US market has made higher lows each and every day since that intraday low. So it is displaying signs of buying support, buying on the dip. The last couple of days, obviously in comparison to that huge 10% up day that we had last week, the last couple of days have been fairly flat, so that's good. That's what you want to see. You want to see it take a bit of a breather without getting smacked down. I mean, it remains to be seen what happens tonight, of course. Don't go out for lunch. The news changes every 2 seconds. But to me, yeah, it's looking constructive. It looks like we'll get a bounce. So I think the US market, and obviously we'll follow, I think the US market will move up towards that 200-day moving average, which was also that little peak there in mid-March, and then we just have to reassess. So does it hover under that line, which would be good if it can just, again, make that move, calm down, let's just see the buying support step in. then we can suggest that it wants to move higher. Otherwise, if it moves up to that line and gets smacked lower, then you need to be a bit concerned. Look, one positive with all this uncertainty is it gives us a wall of worry, and we know markets climb a wall of worry, and they peak on euphoria. So look, I think while there's things to worry about, there is that prospect that we can continually be drip-fed positive news. There'll always be something negative in the background, but the markets for the moment, just purely looking at price action, look like they want to head higher.
So you mentioned that the local market here likely to follow then what we've seen in the States. Let's drill down a little further at some individual stocks that have been sold off, along with a broader sell-off there. Beginning with Macquarie. Now that's off, about 25% over the past month or two. Are you seeing an opportunity here?
Yeah, definitely. So, Macquarie is one of those stocks that tends to be quite leveraged to what the broader market does. So when the market goes up, Macquarie goes up as well, but more so. But it also works both ways, and we can see that that's what's happened recently, where the market's dropped, whatever it is now. I have to look at the latest numbers, but Macquarie's obviously fallen more than the market in the past few weeks. This is a weekly chart. What I've observed is it's bounced off a very sort of key support level here, around 160. So it basically started last week at 160 and has headed higher off that. So, I think for investors out there who do have some dry powder and do recognise that there's an opportunity here, try to avoid the stocks that have been beaten down way too much, those that have already been trending lower before the market got sold off, because the stocks that should do best from here are those bigger quality names that a lot of people looked at last year and thought, I've missed out again, it just keeps going up. These are the sort of go-to stocks. So Macquarie, in my opinion, is one of those go-to stocks. I expect it to bounce pretty well, maybe up towards about 220. It's trading around 180 at the moment. And that 220 level will represent a bit of resistance, and that's where we reassess. But yeah, this is one of the stocks we were buying last week for clients.
Well, another stock that's always in favour for investors trying to look for an in is Pro Medicus. It has come off a lot, but just seeing a bit of a reversal.
Yeah, definitely. So this is one of those stocks that a lot of people would have been looking at last year and thought, I've missed out, it's too expensive, it just keeps going up. And then before you know it, it drops from about $300 down to levels under 200. So, big decline on a stock like this. Whether it can get back to 300 remains to be seen, but this was another one that we decided to pick up a bit of last week, because we were out several weeks ago on our trailing stop, and it gave us a good opportunity to get back in. This is a weekly chart. What I've circled there is what's known as a bullish engulfing candle on a weekly chart. So what that means is it opened the week lower, but by the end of the week, it was higher than where it was the previous week. So very positive price action consistently throughout the week, good buying. So again, if we just sort of turn off the news and we're just looking at price action, how the market's trading, that's a great reversal. Again, I can't predict if it'll get to 300 anytime soon. It might need a while, but I reckon in at least the next few weeks you'll see a pretty hefty bounce. Even if it makes it back to 240, that's still a 20% rally from here. So why not? Why not take the trade?
Why not? Well, that's the question. Finally, Michael, gold has been in focus, of course, because record after record we've seen the bullion price. The question for investors: can this continue? What are the technicals telling you?
Yeah, so I've mentioned gold a number of times last week. I think when I was on the show with you a month ago, Andrew, I was talking about gold could get through 4,000 this year, and even numbers well above that. And I thought, well, look, let's sort of back that up now. I'll come back with a longer term chart to demonstrate why that could be the case. So this is a chart going back to pretty much the early 70s, and I've circled the prior two major moves in gold. Now this chart is on a log scale, so each of these moves in percentage terms, you could sort of see how they sort of almost match up. So in other words, in the 70s, when the US moved off the, pegged its US dollar to gold, they moved off that. We could see it rallied from about $40 US an ounce to about 600. So that's a major move. We could see at the end of the 90s, early 2000s with the Asian financial crisis, US tech wreck, gold under $300 to levels above 1500. And then at the far right, I've circled what's been happening in the past year. So yes, gold's moved from 2,000 an ounce to a bit over 3,000. Feels like a big move, but compared to previous sort of major worldwide events, which I think we have to admit that we're sort of going through right now with what Trump's trying to do with tariffs and the way he's treating relationships and all these sorts of things, we could be in another one of those sort of major moves for gold. And when you look at this chart, we're still early days. So look, gold's done quite a bit in the past few days. I take that for granted, but I think what we need to do is, if you see dips in gold and the gold miners, I think it's a buying opportunity.
Michael, thanks for joining us in Fairmont Equities.
Thank you.
And that is the trade for this Monday.
The Trade was brought to you by Vantage Markets, delivering one of Australia's most trusted and award-winning trading experiences. Explore smart trading at vantagemarkets.com.au.